Hey everybody, this is Lance from Thetatraderz.com. This video I wanted to look at the difference between investing and trading and thinking about this quite a bit on what type of trades that I do. Some of them that are short term obviously would be trading. Some of them that are just buy and hold obviously is investing. But there's a few trades that I do that kind of skirt in between the lines of trading and investing. So I'm going to look at one specific strategy that I've been doing where it's kind of a little bit of both. And as long as you are having that long term mindset on these trades, I think you could really count them as either one. So let's get right to it. Recently, and the long term investing channel that all members do receive. So, any plan, if you're interested, feel free to join. You'll see this channel. So, I wanted to see some of the data of what percent of your total brokerage accounts you use for trading, um, counting regular brokerage accounts, IRAs, Roth IRAs, and whatnot. And interesting data here. The tie for the most were 0 to 20% in trading and 60 to 80% in trading. There was a decent amount that was 80 to 100%, and then also a decent amount is 20 to 40%. So again, a pretty wide spectrum in these. I personally voted for the 0 to 20%. I have about 11, 12% total right now in my trading accounts, and the rest is long term buy and hold. However, there's a small percent of these that it's really hard to say, is it used for trading or is it investing? And let's look at a specific strategy that I'm doing that has a little bit of both in it. One of the main trades that I'm doing that I'm pretty sure is called investing in the end, just based on how I actually manage the trade, is a covered strangle that I do on SCHD. And I do this on my Roth IRA, fully cash secured on the cash secured puts. And what I'm doing is I'm buying 100 shares, or 200 shares in this case. I already had 100 from before. So I already had 100. I bought another 100 shares at 28.75. I sold two cash secured puts at the 28 strike, so really close to at the money here, and took in 0.26 premium for it. I also sold two covered calls slightly higher at the 29 call, and I took in 0.23 premium on that. And it's going to be expiring pretty shortly on 12/20. This isn't with all of my shares of SHD. I have quite a bit more that I'm just buying and holding and just collecting the dividends, dripping it, and regularly investing into it. However, in this particular trade, I'm okay getting 200 shares at the 28 put, and I also have shares to hold, and I'll get a little bit of upside protection, or upside gains. If it goes from 0.75 to 29, I'll get $25 per position on capital gains. And I also took in 0.23 premium on the covered calls. So a little under 1% on the premiums for the month in covered calls, but then another about 1% in capital gains if it goes up to 29. If it goes down to 26 though, I'm taking in close to 1% on the premiums for the cash secured put. Just take the $26 divided by the $2,800 you need for each put that I sold. And I'm okay getting these extra shares at 28 because I'm going to lower my cost basis. Initial shares are 28.75. If I take in more at 28, if you average that out, it's going to be lower than the initial cost outlay of 28.75. Now, the way I'm managing these trades are, if I get a sign at that 28, I'm going to always make sure that I could sell covered calls above at least my average of shares. So I'd look to sell a 29, maybe 30 covered call. And I might do them per month. I might do them a few more months out. It really depends on what the premiums are. The premiums typically aren't too much on SCHD, but I'm perfectly okay with getting in premium as it comes in month after month or every few months as I do the trade. So it's hard to say, is this really a trading or investing? Because I'm not going to be taking a loss on any of these shares pretty much at any point. If I happen to get assigned at the 28 and my average is lower, I'm never going to sell a covered call lower than that. And I'm perfectly fine with holding these shares for years if I need to. Not necessarily selling the covered calls in each point, but taking in the premium on the cash secured put, lowering the average of my shares, and then just waiting for an eventual recovery. In this case, SCHD or dividend growth companies, pretty low implied volatility. They're good fundamental companies. So there's a good chance eventually that they would rebound if it dropped below that 28. Now, a few others that I'm doing that are probably more towards the trading aspect, but I'm still considering to not get out of the trade until I at least have a slight profit on it. So Hood for HOOD did a covered strangle on 11/25. It's going to expire on 12/20. Bought 100 shares at 38.15. Sold a in the money call in this case at 35. However, I took in 4.55 premium on this in the money call. 38.18 minus the 35 is 3.18. So I'd actually lose $318 on the actual shares if it doesn't close above 35. But I took in $455 as well. Then I'm also okay taking in another 100 shares. I sold in this case, a naked put, not a cash secured put, at the 31 strike. And I took in an extra $46 here. This is over 1%, even if it was fully cash secured. It's even more when it's on margin. If it happens to drop below that 31 and I take in an extra 100 shares of Hood, I am going to figure out my average of the 200 shares, count the premiums that I took in with that average, and then I'm going to wait for an eventual recovery and not make sure that I sell covered calls above the average of my shares. So again, these type of covered strangles are really blurring the line between trading and investing. Again, I'm perfectly fine taking and holding these shares for a long time. If I think that a certain position is overvalued, I'm willing to sell that cash secured or naked put below the current price. And then if I'm assigned with it, I'm perfectly fine holding it for quite a while. And if I get a good entry on some of these positions, I may not even sell covered calls for a long time anyway, and just hold it for a long time. So I'd like to hear what you guys think. Was these covered strangles investing or was it trading? It's really hard to say in my case. I got to think it over a little bit more. So I hope you enjoyed that video, and I'll see you guys on the next one.